Today, we're diving into the Parabolic SAR, a great tool for traders looking to identify trends and spot potential reversals with precision. The SAR or SAR in Parabolic SAR stands for Stop and Reverse. It's designed to help traders not only identify the trend direction, but also pinpoint potential entry and exit points within that trend. At its core, the PSAR plots small dots either above or below the price candles. These dots indicate the direction of the current trend. Here's how it's calculated. The PSAR uses a formula based on the most extreme price points and an acceleration factor. As the trend progresses, the dots move closer to the price, trailing it like a shadow. Now, while the PSAR is a fantastic tool for trending markets, it's important to remember that it performs poorly in range-bound conditions. The dots can flip back and forth, causing confusion. This is why pairing the PSAR with another indicator like a moving average or an RSI can help you filter out those false signals. To use the Parabolic SAR, start by identifying the overall trend direction on a higher timeframe chart such as the 4-hour or daily timeframe. For instance, if the dots are consistently below price on the daily chart, you can pretty much confirm that the asset is in an uptrend. This gives you a foundation before moving to a smaller time frame for precision entries. Let's look at a basic trend following strategy. Here's how it works. Start by confirming the trend on a higher time frame. For example, utilize the PSAR or something like a moving average to confirm an uptrend on the daily candles. Next, on a smaller time frame, wait for the dots to switch positions to match the higher time frame's bias. For example, when the dots move from above the price to below it, this could be your entry signal to go long. When you're entering the trade, go ahead and place your stop loss near the last SAR dot on the opposite side of price. Then set your take profit at 2 times your risk. To give yourself even more confidence, try adding something like a moving average or an RSI to either the bias or entry process. One example could be taking the entry when the lower timeframe PSAR realigns with the higher timeframe PSAR, while the RSI is also in alignment with the higher timeframe. Another example could be only taking longs when the PSAR flips to bullish while above VWAP, or shorts when the PSAR flips to bearish while below it. I think it's worth noting here that the default settings for the Parabolic Stop and Reverse might just not suit you. The acceleration factor is usually set to 0.02, and it controls how quickly the stop and reverse dots move closer to price. Increasing this value makes the SAR more sensitive, but it can lead to more false signals. Decreasing it makes it less sensitive, but slower to react. For swing traders, a lower acceleration factor might work better for you as you're looking for more sustained trends. For scalpers, a higher setting could help you find the shorter, quicker moves. One common mistake traders make is relying solely on the Parabolic SAR. As we mentioned earlier, it's not designed for range-bound markets. Always use additional tools to confirm your analysis. Another pitfall is failing to adjust the SAR settings based on the asset being traded. A one-size-fits-all approach generally just doesn't work in trading. If you like the Parabolic Stop and Reverse, try out different settings on your favorite asset to find the best fit. And remember to backtest and forward test every new strategy before taking it live. If trading with the Parabolic SAR is your jam, let me know down in the comment section. And don't forget to like and subscribe. See you next time, everyone.